What's up, guys? Coming at you today with a video here. I want to talk about some alternative investing because I know a lot of you right now are probably looking to say, well, where do I put my money in this day and age with, everything that's going on? So I decided to jump in and try to create some videos that kind of talk about this topic and give you guys some alternative ideas to invest. So one of the platforms I use is called Groundfloor. And so what is Groundfloor? It sounds kind of weird. What kind of stuff is it? On their site here, we can just walk through really quick so you can earn up whatever. They actually have two different products. I don't want to confuse you guys. We're not going to be talking about stairs here. This is basically just, I think, like their savings account type of thing. But it's not, it's not high returns. It's nothing too great. It's not really investing. It's just kind of like a bank account from my understanding. But what Groundfloor is basically what they do is it's like kind of like, I don't want to say real estate investing, but essentially what you're doing is you're backing people who are actually doing the renovation and getting involved in the actual real estate aspect. So what they do is they need a lot of capital. So what you're going to do is you're going to provide them with the capital that these people need, and you also get a pretty decent rate of return here. So we can walk through just the rest of their page really quick. Here's their annual percentage. Here's their stairs app, which don't really want to discuss today. So let's just skip over that. But you can earn some pretty decent returns, where they lend. So you can see all the different states where they do lending. So they, help back up these people. Here's their reviews right here. But I'll go ahead and I'll just dive right into the actual content here and show you guys kind of what you see when you actually invest into Groundfloor here. So what you do is you have kind of this invest page. So when you're making your investments here, instead of choosing like an individual stock or something like that, instead what you do is you pick an actual property here. So they have these different loans funding here for available investments. You can see sort of the rating here. I think they go through A through F. And that's kind of like a generic, overall rating. But I will say, depending on how this is graded, that also determines the rate as well. So if we just sort these by, the rate, so we can see 8% is a B. And then if you kind of do it to E, you can see you get 14%, right? So you kind of know that some of these are more risky than others as well. So you can kind of, see which one. And they have some generic information here. How much longer is the term? The valuation, payment scheduled, all of these are going to be deferred. Typically at the very end of the project, you will actually get your money back then once they actually sell the home. So that's when you'll be paid back. The amount of investors, the loan amount, how much money is remaining and how many days. But what's really cool too is, this is kind of generic, but you can actually dive through and actually see a lot more information on these properties too. So you can see, balloon payment, already discussed. You can see what they're expecting the value to be after they repair it. The total project, costs here as well. You can see how much that they want from Groundfloor. So right now they're seeking out, over $600,000 from the users at Groundfloor, and they've put in, $400,000, which is pretty good. I've the skin in the game at first. I didn't, I was like, oh, whatever, but the more I look at some of my loans after they've been, I'll show you guys that in a minute, but you guys will see that skin in the game is definitely more important. And then so you also have these their grade factors here. So the loan to ARV, every loan starts off 10 points, subtracted by that. So you can kind of get, this score here. So this is kind of in between here at 5. The quality of the valuation report, I mean, 4, that's pretty good. I guess that's the maximum skin in the game. Like I said, it's pretty good. We've gotten 8 out of 10 here because they've put up, 40%. You're putting up about, 60%. Location here, so you can get the actual address here too. So, this is St. Petersburg, Florida here. So I guess, if you know the local market, you know a bit more about the location. Borrower experience, so that's kind of based on what they have and their commitment. I don't know how this is based. Part-time, okay, so if they're doing this part-time or full-time. So is, Neo Metro Properties Corp doing this full-time, or is this kind of a side hustle for them as well? That kind of gives them some insights here. Purchase price, purchase date, valuation reports. They give you all of this information that you can go through here and just see everything, right? You can see about this individual, they have, multifamily 4+ units, kind of just some generic information about the Neo Metro Properties Corp here. So you can see kind of, more of this. I know if you go up here, I think you can actually click on this. Well, yeah, I think it just brings you back down. So you can see, the information about this individual borrower as well, which is great because, if you're making these investments, you definitely want to get repaid is kind of the point here. So you can go through, do your evaluation. Once you've determined that you like, this investment, you can go ahead and type in, whatever investment amount it is. I will say that they do only take a minimum of 10, and I don't think that they actually take change. So if you did 10, $10.56, then you can't really do that. It's just the dollar amount as well. So it's like 10, 20, 30, stuff like that. But change doesn't work very well, which comes into play when you get your investment back and you do get some change. So yeah, they have different loans. Check them out. You can see all these different things. There are plenty of loans. I get email alerts about them adding new loans. So if there's something you don't like, probably log in tomorrow and see something you like. But normally I just kind of sort through the rate and kind of look at kind of the numbers here. You can see I put 13%. Only put 150 in to see. And now I'll go ahead and I'll show you kind of my investing, right? Because the biggest fear is, oh man, what happened with all these projects? What's going on with the projects? And what's great too is you can actually see, let me pull it up really quick, how your projects are doing then as well. So after you've invested, you kind of want to know, well, hey, what's going on with this, right? So some of these, you can see these are my performing ones, right? And you can see these are the extended ones, so they've gone beyond the initial agreement and then the default. And I haven't had any default yet, which is great. I will say that if someone does default, my understanding is because the way the contract is written out, and this is not legal advice, but from my understanding and what I read was basically you are one of the first people to get paid back. So if that does ever happen to me when one defaults, we'll see what happens. But we do have some extended ones, so let's just dive into some of these, like one of these extended ones, and show you, if you're sitting there in panic mode, like what's going on with these. We can see here that Groundfloor has advised listing is in progress. This, and that gives you dates and what kind of stuff they're doing. And notice the default has been sent to the borrower. And they give you periodic updates as well. This might not be the best example because I'm not sure what they have to do, like what, if they have to give you updates, but some of these, they give you update by update, right? You can go through some of these, right? Site work is complete, roof is complete, gutters are complete, porch is complete, right? They're just telling you everything that's done and giving you a great status update. So that's something else you might want to think about. Maybe you'll start following these borrowers, if you really like, how meticulous they are about, keeping you updated with your investing and how they're progressing along with everything as well. So, the question is, why use Groundfloor, right? And let me just say that the best thing about Groundfloor is, you get, the liquidity is difficult, which is good and bad, right? You can't necessarily take your money out after you've invested, but you can also determine, how much risk do you want to take on versus how much reward as well, right? So unlike the stock market where every, Monday through Friday, typically you can log in and see what the valuation is of that day of your individual stock or whatever it is. Unlike that whole thing where things can fluctuate and you might sell or you might just panic and say, wow, everything's going down. How do I guarantee, sort of, or have a, lower volatility, if you will, of your actual portfolio? And, one way is that I think could do that is basically investing this way, and that's kind of what I've been doing, right? If I'm just like, man, I really just want to get, I want to put $1,000 in and I just want to get my capital back out, right? I don't want to have to sit there and say, oh, it's $9.98 today and log in tomorrow. Oh, it's $9.96 today. It's kind of like, hey man, you get your money back plus some, enjoy. Thank you so much. So that's what I like about it is, you just get a good return, on your capital, right? And we kind of talked about the risks then as well, right? Some of these can definitely be more risky. If you're looking at some of these E's, the 14% rate, you might want to dive through this really quickly, see if it makes sense. Like they don't have that much in it, right? So what happens when they default? But it's also not a crazy amount that they're, putting in, right? This isn't millions of dollars they're expecting from Groundfloor. So you definitely want to make sure what you're investing in is pretty good. So that's pretty much the generic basics, but they also have some cool other features as well, right? If you want to turn on, like they have, let me see if I can find it here. They have this investment wizard, right? Where you can basically go through and say, um, how much do I want to risk, right? And you can basically type in, the amount, select the strategy, you can select the different loans. Let me see if I can pull it up in a different way here too. But you can basically, kind of modify how you invest if you just want to just set it and forget it, right? And just have a, this is cool too. They actually have notifications for everything. If you just want to set it and forget it and just have them, put in the money into whatever loans you kind of specify by the criteria, you can do that as well. So I think that's great. One thing that people brought up, they actually have a WeFunder as well that's going on right now. So they actually have individuals that are now investing into their platform right now, and it's available on WeFunder for, they've had 800 investors at, $1 million then that they've received from everyone, where, people are trying to invest in the actual business of Groundfloor as well. So I don't want to confuse you guys, but I did want to point out one great question, because people are like, oh man, these house flippers are bad, these businesses and stuff like that. But what's great is we get a good, feedback from Brian. We have this user that says, I really appreciate your dedication to opening up on investment opportunities to small investors. As housing has become increasingly unaffordable for many Americans, have you considered your own influence on the housing market? Right? So are you making the problem worse? What exactly are you doing? And Brian has this great response here. It says, the investors we finance are typically focused on renovating aging housing stock or building houses that are sold to first-time buyers. New construction is typically 25 to 30% of our origination volume, and we expect to see a lot of demand on the other side of this phase of the housing cycle. The average selling prices for the properties we finance, renovated or new builds, are typically below the local median. We are also one of the real estate financing companies in the US that underwrites the development of the accessory dwelling units, ADUs. This is promising innovation for increasing supply in neighborhoods that would otherwise be at risk of gentrification by increasing density. Similarly, we've created a strategic alliance with Pad Split, I'm not very sure they are, which is an innovative solution along the same lines. So what's great about his reply is he's like, we're not really focused about, your BlackRock, Blackstone, anyone that's big time that's going out there and buying up these properties, right? And you can kind of tell that if you look at some of these things, these are just, kind of like local people. They know their local market. They need some capital. They're trying to fix up this place, and they're trying to actually even help out with housing, right? Say, for example, there's a house that's, uninhabitable, right? These people can go ahead, they can get some capital, and they can turn that into an actual property where someone can live, which is kind of a great experience, right? And what's great here too is, this WeFunder, Brian has actually replied to, I think, every response. I haven't gone through all of these, but you can see that they're very, they tell you exactly what's going on. I will say their financials, at least in my opinion, don't look that great right now. But some important key facts, they have 200,000 users. I think they had close to, was it 900 million invested in the platform? I could be wrong about that as well. But they definitely have a lot of people on this specific platform as well too, right? And overall, I think it's great and stuff like that. And the way that I actually got addicted to getting in this platform is actually, I think, from the free money. So I know when you sign up for the first time, I think you get like a free $50, right? So, get $50 when you invest in for a friend, you get 52. So I was like, maybe I should do this. And I put $50 in, and then I just had it sit there, and I was like, let's see if I like this, right? And I just put it in like maybe 5 investments, right? So I was like, I'll put $10 in 5 investments. And then I was like, let's just see how they do. And then every now and then I just, this investor account, this just kept ticking up here. So it's just like, okay, I'll keep going along here, and so far the platform's been great. I use it pretty much every day, it's not my primary investing platform, but I will say I kind of like it just for diversification. I don't feel bad when I put money in there, because I feel like every time I put money in there, I get the return. And I'm saying this now before, anything crazy happens, before anyone defaults, anything can happen, right? All these can be risky, but so far, that hasn't happened to me yet. I'm pretty satisfied with the platform. I'm going to continue to use the platform on a daily basis, as, a subsidiary to other investments, right? Just to mix things up. Yeah, I hope you guys enjoyed the video. Please go ahead, like, subscribe, comment in the video if you have any questions for me, if you have any feedback as well. Thank you guys so much, and have an amazing day. Thanks all.